Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, we are going to talk about some super good data that we got about the housing market, home price forecast, and how to read these charts. Juana, there has been a lot of news come out, Redfin and others, that is, it's the data that they're putting out, they're not putting out in perspective, meaning the headline is sort of exciting, and then you get in the article and it's not that big of a deal. People are retweeting these headlines. We're going to show some examples of that. And then we're going to show the data they actually used, right? So why do they do that? Like, what's the whole methodology that they have behind a big headline and then later on in the article, some other random thing that is not applicable?
Well, two things. One, headlines catch people's attention, right?
Okay.
When you catch someone's attention, what happens? Number one, they maybe linger longer, right? Mm-hmm. Depending on the media source, maybe that means that advertisers get a longer shot at you being exposed to their product. Mm-hmm. And then the second portion is, of course, that you are more likely to pass that on to others, and same thing, infect them with the advertising.
Okay. So Redfin had put out this chart that basically said there's 2 million houses available for purchase, and it got retweeted with a bunch of people saying this is the most since the housing crash, and then there were 500,000 less buyers than there were homes available, which I don't know how they counted all the buyers. They must have had drones flying around counting people getting out of agents' cars.
Okay. So, a lot of times in these articles, they do at the very bottom list the methodology. Sometimes the methodology is pretty straightforward. Sometimes it's a little less straightforward, we'll put it that way. But to me, that doesn't mean anything. What I think the most important portion to really pay attention to is what's the ratio, right? What's the ratio between buyers and sellers? Because that's the most meaningful thing. It doesn't matter if you're talking about 1 million homes for sale, 2 million, or bajillion homes for sale. What's the ratio between buyers and sellers? That's an important thing to keep in mind. The other thing to keep in mind is just watching the market. And does it make sense? So let me give you an example. So let's say that sellers outpace the buyers by 2 to 1. Okay, so we have twice as many sellers and we have half as many buyers. Okay, so that makes it clearly a buyer's market, right? Because we have so few buyers and so many sellers. Mm-hmm. Well, what's happening in the marketplace? I mean, do you see these dramatic price reductions to move the product? Probably not. So if you're not seeing that dramatic price reduction, then that means that maybe there's something else afoot, right? Mm-hmm. Maybe that ratio is not as dramatic as previously thought. Maybe there are other things at play. So I think you need to look at different things. The other thing that people are talking about, inventory is rising. Well, of course inventory is rising, right? Because it goes up.
Does it every year at this time?
It goes up every year at this time. And that's a normal thing. Well, is it rising to levels that are going to cause substantial price reductions? Well, I'm less convinced about that. One of the reasons that inventory is rising is the product. And I've said this before, not having the right home to buy is a reason why buyers aren't buying. They're not necessarily buying because there aren't homes for sale. We can all agree there are lots of homes for sale, but why are they not buying? Well, one of the reasons why buyers aren't buying, besides interest rates, is because we used to turn homes every 5 to 6 years, right?
Yep.
So now we're turning homes about every maybe 11, 12 years. So we've got this aging housing stock. And what happens to buyers who are financing homes? Well, they tend to finance homes toward the top of their price range, right? And that doesn't leave them that much cash. So if it doesn't leave them that much cash, then they can't do the renovations to turn the home into the home that they want. So they're waiting for that Goldilocks home, which causes homes to accumulate on the market. So the whole thing is much more nuanced than, we have too many sellers and not enough buyers. It is much more nuanced than that.
Okay, so Redfin said 2 million homes, you got all this excitement about it. So I went on Redfin, who gave us the data.
Did you sit on them?
I sat on them until they gave me this chart. I called the CEO, gave me this chart. Here, this is Redfin's data, this exact same data they're quoting. That little line all the way to the right, if you look at it, these numbers here are all home for sale, According to Redfin, this is literally today, or for you it would be yesterday because you're watching this the day after we filmed it, right? This is they're saying how many homes are on the market right now. That little red line all the way to the right, national, see it's red. It's all things. This goes all the way back to January of 2012. They're showing we basically have about the same number we had last year. We have a little more than we had in 2022. But then if you go back to 2019, 18, 17, 16, 15, 14, 30, we have like 500,000 more homes on the market those previous years. So whatever they're saying the number is, it was 500,000 more. And remember, the 2 million homes does not crash the housing market or whatever number they're saying, because clearly by this chart, they're admitting there were more homes available. Whatever their methodology is, there were more homes available in previous years. So that was one thing. Here's the other thing. If there's such a massive imbalance, Juana, 500,000 more sellers than buyers, what would that do to homes? Like literally, if 500,000 people couldn't sell their homes, they would have to drop prices or take them off the market, right?
Right.
So wouldn't Redfin figure that into their, if they really knew that, if they really believed it, if they weren't just trying to get clicks, do you think they would predict home prices would drop?
Yes. I mean, I think predicting that home prices predicting anything dramatic is enough to get people to linger on a headline, right?
Yep.
And when you predict that home prices will drop, then the thought is that more people will put their homes up for sale, trying to capitalize on their equity before their equity dwindles due to declining home prices.
Well, this is Redfin's forecast. Okay, now this is important to listen to what it says. Redfin forecasts U.S. home prices will dip 1%. That's definitely a crash.
Okay,
1%.
So that's nationally. That's not in your market.
Yeah.
Your market is different.
By the end of 2025, and it says published May 22nd, 2025. So this is literally halfway through the year already.
Right.
So they're saying they'll drop 1% from now to the end of 2025. Then in the very same article, literally, this is what they show. First quarter, 3% increase, because that's what we had in the first quarter. And then it even says quarters 2 to 4 forecasted. Second quarter, which we're just finishing, they're saying home prices will be up 2%. Okay? So 5% already for the year. And then for the first 6 months a year, quarter 3 flat, quarter 4 minus 1%. Almost every single year in the last 50 years, home prices fell in most markets and nationally, basically in the end of the third quarter, beginning of the fourth quarter. The fourth quarter home prices fall, but we make up for it in the spring months. Like this estimate, like, oh my gosh, they're making some big prediction, is not really like, this is pretty much known, right?
Right.
So anyway, I thought we'd point that out. Here's the other thing. So when you see all these numbers, they're including new home sales in the numbers. So if you're reading one article and it says, oh, well, last year there were 900,000 homes and today there's 1.9 million, we didn't add a million. Redfin, in their number, this is from a Redfin article, they state new construction homes are making up a smaller portion of total inventory. So they can't make up a portion of total inventory if they're not including total inventory. Fred, Realtor.com, do not include new homes. They're separate. National Association of Home Builders, they have their number. They consider that a different market because you have people who really just want to buy a new home. And then you have resale homes, which is what Redfin throws all into one thing, which is what we saw in that chart, right? It also even says here, newly built homes made up 25% of single family homes for sale nationwide in the third quarter. Because this was the third quarter of last year. So they're saying that of the total amount of homes, that a portion of those are new. We don't know how they count those. Are they counting all the homes available, only the homes that haven't sold yet? This could be dirt lots. The builder could say, hey, we have a dirt lot for sale. It may take 9 to 12 months anyway to build that thing out, right?
Right.
Okay, there was one more thing I wanted to show you here because I thought this was pretty cool. And that was this. This was the housing market forecast for 2025. This just came out. All of these people, Fannie Mae, MBA, Mortgage Bank Association, and NAR, they have all this data too. They can see how many new homes are for sale. They can see how many people are buying. They can see what trends are. This is what they're saying. Fannie Mae, home prices rising 1% year over year in 2025, which we basically have had. That was effectively the first 2 quarters. And 2% 2026, which is not a lot, right? Mortgage Bankers Association price goes slowing, so growth is slowing. So they predicted more last year. Now they're saying only 1.3% appreciation, 0.3% 2026. Pretty soft market, right? And then NAR is saying increase 3 in 2025, 4 in 2026. They're all guessing. Nobody knows. But how come none of these people are smart enough? Because the only people predicting home prices to drop right now are crash bros. Actually, nobody else is predicting that. What do these companies and these firms don't know? What is it they're missing?
I don't know they're missing anything. I think really these numbers to me are much more interesting, not in the numbers themselves, but in the difference between them. And it makes the point of how everybody arrives at these numbers, how things are weighed, what things they consider. And if these well-financed organizations and full of really smart people differ so much in their estimates, then we can certainly give Redfin a break as far as what they're estimating as well. It just gives you an idea that the trend, which is kind of what I said at the beginning, look at the spread, look at the trend. And that's what's important in these numbers. What's important in these numbers is the trend. And the trend is that all of them see stability in the housing market. They don't see an impending crash or doom or the sky falling. And I think that's the important thing to take away from this. Just like I said before, it doesn't matter what the inventory is versus number of buyers. It's that ratio that matters.
There's certainly some markets overbought. It was funny. There was one Florida market where somebody was like, "Oh my Todd, this Florida market." I was like, that market's up 80% over the last 4.5 years.
Right.
Yes, it's probably a bit overbought, and going forward purchases probably for a little while won't be, certainly probably won't keep going up. They'll probably decline, especially if there's a huge imbalance between sellers and buyers.
Right. So, but that goes with any asset class, right? It goes with gold, with Bitcoin, with Apple, with Google, with everything else. When you have a huge run up, then that asset is going to kind of take a breather for a minute. It might decline a little bit. It might just kind of stagnate for a little bit before it starts running up again. It's the same thing with real estate. It's just another asset class, and it will behave the same way.
Right. Anyway, the important thing to get out of this video is when you see a headline or see a piece of data, you have to be careful what you're comparing the data to, because using the 2 million available homes number, including new homes, we had 1.7 million new homes on top of the 4 million MLS listings in 2006. Mm-hmm. So we actually had, and this was actually 2008 wasn't the housing crash. The prices started dropping in 2006. And so we had 5.7 million homes, really, compared to 2. And it was a smaller country, so it's a bigger percentage of how many homes are in the total marketplace. Mm-hmm. So that's just something to think about. Got to be careful with just the one number, because here's the thing. If Fannie, Freddie, Mortgage Bankers Association, NAR, and these actual entities are constantly messing up their predictions, there's going to be repercussions against them. If a crash bro is making $20,000 or $30,000 a month from YouTube videos or social media posts, mm-hmm. they make a lot of money. They don't really care about the repercussions, because they'll just be like, oh, whatever. And then they're cashing in every day, regardless of whether, they're right or not.
Right. So crash bros don't have any accountability, while these organizations do. So the trends that these organizations are forecasting are probably more reliable than the crash bros. The truth will be in the pudding. So keep watching the videos and keep track of the market with us. We love it when you leave us comments. Mm-hmm. Thank you for watching. We appreciate it. Please like the video, subscribe, hit the notification bell, and we'll see you on the next video. Bye.
Bye.